Welcome to Rich Keys Trading Channel, where we unlock one candle at a time. Please pay attention to the disclaimer on your screen. And with that out of the way, let's get into the charts. Welcome back, my fellow traders. Today is Sunday, the 23rd of November, 2025. Time is about 7:20 a.m. New York time. And as usual, I've done my analysis and my market review, and I like to share my insights with the trading community and my fellow traders. So welcome aboard, and let's get into the charts. Again, quick reminder, this is not financial advice. I'm not qualified to give anyone a buy or sell signal here. I just do the analysis and I share the insights, and you are free to use the insights to build your own analysis as well as to formulate your own trade plan. All right, with the disclaimer out of the way, let's get into the chart. And I like to start off the dollar index on the weekly time frame from capital.com. So the dollar index closed with a very strong bullish, green, solid green engulfing candle, overshadowing both last 2 weeks bearish candles, suggesting that bulls are in charge here on the longer time frame. Now, bulls have hit a wall, a glass ceiling that they hit before, and they having some hesitation at this level. So, based on this hesitation, I do think that there will be a pushback, potentially in the early part of next week when trading resumes, and there will be a continuation. I don't expect the pullback to come below 99,377. We need to hold this level. 99,377 level needs to be held strongly on the pullback. So if we get a pullback to this level and find support, that will be a strong confirmation or a strong evidence for continuation to the upside. Now let me step down to the daily chart quickly and let's look at something on the daily chart. So on the daily chart, this same resistance zone that I'm talking about here, right here, all right, is what we're seeing on the weekly. And the volumes are pretty convincing that bulls are pushing, and they might break through this resistance. However, I like to show you something on the indicators, and that's where the caution comes in. So, indicator wise, if that level or resistance level doesn't break, this is a divergence right here on RSI. So, this is your previous, resistance high. You've gone to the same resistance, but this is where your RSI strength is. So, here, divergence is spelling caution. Same thing on your stochastic cycles. We are almost at cycle high as well. So there's some level of a caution, and that's why I envisage that a pullback on the Dow index probably would happen before a continuation. But stepping into the 4 hours, we realize that on 4 hours we are just consolidating sideways. So on 4 hours after we hit this resistance, it's just been going sideways. Usually, if a resistance would fail, it would probably get a sharp reversal because there'll be orders waiting here that would sell into it. But looking at the volumes that is, maintaining this level suggests to me that bulls will try and break through this resistance and continue their way up. However, prepare also for the event that we may pull back down to somewhere about where I showed you on the weekly chart, which is somewhere around the 99,381 level. All right, so that's about all that I like to share on the dollar index. The next asset I like to look at is Bitcoin. Okay, and here is a weekly chart of Bitcoin. Again, data feed is from Coinbase. That's the one I'm using currently. Um, Bitcoin has hit all my down target from the 126 analysis level to this fib extension here is 1.618, okay, of the entire move from the top to this level. So let's look at what is possible to happen next on Bitcoin because this is a new territory now for Bitcoin. It's broken all the moving averages on the weekly time frame. This is a 55 EMA broken. It's also touched the lower Bollinger Band as well as the lower KC band on the weekly chart. These are bearish signals to me. I know most people are calling this the bottom here. I don't think so. At the best case scenario, I think we may go sideways or may get a little bit of a bounce and then we continue. I usually don't see when charts hits these Bollinger Band or KC Band once and then turns around. It's kind of an exceptional move if that happens. So looking at this weekly candle, more likely this week is going to end like this, probably with a little bit of a wick, but a solid red candle. That's a bearish candle, in my opinion, suggesting that next week we will revisit these lows here, we would come down low. And if we do get support here again, this could be an early signal that we will get a retrace from here, potentially to about 98,021 or maybe 103. We'll have to look at it week by week. But next week, yes, I'm expecting us to continue the move to the downside. So we'll figure it out once that happens, whether we'll get an upside, target or not. But for now, my bias is to the downside. The indicators don't also support that we have a reversal yet. Yes, RSI is quite oversold. It's kind of in the territories of March 3rd. But again, we don't have a divergence to say that the fall is over. So if you look back at when March 3rd, we came to this level on RSI, yes, we did make a move back up. We did have a little bit of a bounce, but we came down again and we formed a higher RSI level before we made our way out of the bearish camp. But this time, things are looking different. As I'm saying, it's broken the support points that you usually would find to have a continuation or a rally. So here we are, and yes, it's quite oversold. But at the same time, people forget that just because it's oversold doesn't mean we can stay oversold for a little while. When we were overbought, we stayed overbought sometimes for several days. If you look here, we were overbought from what? From October 28th all the way down to about December 9th. It was overbought, but price did not reverse. But whenever we come into the bears camp, everybody is too quick to say, "Oh, we've fallen enough, and we're going to get a sharp V shape." It could be. I could be wrong, but that's something we wait to see on the chart. At least I'll be looking at for another red candle next week, and then we'll make that decision afterwards. So we'll look at it from that perspective. MACD is also suggesting we don't have any reversals yet. With a solid MACD still pointing downwards. We don't have what we got here the last time. If we start getting this maybe at the end of this week, with a push down but higher low, or divergence, same low but with divergence, then yes, we can talk of reversal. So I'm still bearish on Bitcoin. The other thing I wanted to show you is one of my indicators that I've just developed. I didn't develop it, but modified. And this is the RSI using a 21 period RSI using a 21 period length. The first time that this crosses the 50% line is major. All the time, if you look on the chart, we came to the 50, we bounced. We came slightly here, we bounced. We came slightly, we bounced. We came slightly, we bounced. This time, we've solidly crossed below the 50. Again, this is telling me that this is not looking good for an upside. So for anyone is looking that Bitcoin is going back to 126 and over, I would say not so fast. Be patient. Of course, when RSI makes it above this level, I'll support that thesis. But for now, where RSI is on my longer time frame, I don't think we're out of the woods yet. So yeah, based on the weekly settings and weekly indicators, I don't think we found our floor yet. Although yes, the Fib 1.618 is a very significant level. So looking at it from the weekly perspective, my next target is either same level here, which is the 80,524 revisit, or we might make it into this liquidity zone here. I've been looking at this liquidity zone for a long while. We potentially could be coming into this liquidity zone, which is somewhere between 78,000 and probably I would say like 70,000. Okay, here is where I think we might get some support or some bounce, and who knows where that bounce would go. We would have to assess the chart once we get here. So for now, this week, I wouldn't even go further. My target is somewhere around the 80,524, and potentially target 2 is this liquidity zone. Step it down to the daily briefly and see what's happening on the daily. So on the daily chart, to me, I think what is probably going to happen, based on my analysis, is this huge volume. This candle tells me somebody absorbed the lot of the selling at this level. This wasn't a retail absorption. This was probably market insiders or a big player. So here is what is giving us what we are seeing currently on the chart as I record this video. And I think at the best scenario, we're either going to consolidate within this channel here, or we may make it up to about what 90,000 thereabout, which is the 9-day period moving average on the chart. Potentially, we could get something like what happened here, where we consolidate, hit just above the 9, and then continuing our way down. So these are scenarios that I'm looking out for on Bitcoin as we enter the new week. But obviously, as you can see, once we finished doing this consolidation move, the next leg was down. So once we consolidate here, we either going to come back down here and either retest this level here, or we might make it down to this liquidity zone as I was showing you from the weekly perspective. So I think I've spent enough time on Bitcoin. The next asset I would like to look at will be the XPX 500 and the NASDAQ 100 stock indices. Okay, so here is the weekly chart of the XPX 500. And XPX 500 has also come to my weekly target I was looking at from last week and a couple of weeks ago. And I did remember sharing that this area here where traders were trapped was really one that was going to bounce off once price gets here. And the psychology of it is simple, when big institutions take a short here and they're holding that short, because when price went all the way up to about 6,853, they were very uncomfortable. And once price returns, they're happy to offload their or cover their shorts in this case. And that's what gives us the bounce. And as you can see, the volume is pretty significant. So this volume comprises both the selling volume and then the absorption volume. That's why it's huge. All right, so now let's see. We've come to a support zone with a good volume candle on the weekly chart. However, the weekly is still closed with a bearish candle below the 9 EMA, kind of finding support right at the 21 weekly EMA. Isn't that interesting? All right. Now, indicators wise, this is why I don't think this has hit its floor yet. And I expect the XPS to continue a move down. Is that officially, this is early signals here, and it's pretty clear. Officially, MACD on the weekly chart is tick below zero. We have a red MACD candle here. All right. We have moving averages or the MACD signal, MACD lines also has officially crossed. Can't get any better than that. Um, these are confirmation signals for me that there'll probably be more downward pressure on the indices in the coming week. My first MACD already ticked below, but that's about 3 weeks ago. It gave us a signal, and it's still cruising down. So momentum is to the downside on XPX 500, and so I'm bearish on XPX 500. Target wise, I think this area is not going to break through easily. And so I think in the next coming week, we will revisit this level. How much bounce we will continue to have, let me look at it from the daily perspective. So, on the daily perspective, basically, this is an indecision or inside bar of this bearish engulfing candle, since the opening and close is still within this candle. So I expect us to probably go sideways when the week begins, probably build a little bit of momentum in a sideways price action, consolidating between this price zone of 66, 63 and this 65.22 before the next leg down. Um, and I think if once we break this next leg down, probably our next target will be 64.13. This is another area that I marked on the chart a while ago. anticipating that here also did kind of provide some form of a liquidity for this whole leg up. And so definitely when price gets here, I do expect that there'll be some support. So yep, based on the daily, I think we might go sideways, and our next push down is to break this support zone that we found into the next level, which is around 6405. Now, there are a few things supporting the sideways price action narrative. Is that if you go and look at where is stochastic cycle? Stochastic cycle is here. Okay, so yeah. So if you look on stochastic cycle, we do have a cycle low, and this is why I think we go sideways. Potentially, we might move slightly up, but the best time to take your short entry is when stochastics hits its cycle high, or at least a mid cycle. So for here, I expect us to either go sideways first, potentially testing those range highs before the next leg down. RSI wise, RSI is still down. We crossed below zero. This is why I'm still bearish on it. Um, yeah, our long term RSI is also, really now below the 50 level, which is where I take my bearish and my bullish bias from. So below here is bearish, above here is bullish. It's very simple. And now officially we are below here. Unless one would say we'll get a V shape, bounce like we had here in October. But pretty much, yeah, pretty much I think this is probably gonna make it all the way down to the 30 levels. So I'll be watching out for it in the next few weeks to come. And I think I don't see a divergence on this chart either. So all right, let's look at NASDAQ 100 next. It's probably going to be a similar picture. Okay, this is the weekly chart of the NASDAQ 100. And again, I guess the story is very similar to the XPX. The NASDAQ 100 also did find support right of the 21 EMA on the weekly chart. Excuse me, and it bounced slightly up. Now, again, I also do expect us to go sideways within this range, somewhere around, the 24.5 to about this 23.832 level. We're going to go sideways for a moment. And then next leg down, I'm expecting on the NASDAQ 100 is somewhere around the 23.169 to about 22.989. So this is kind of where I'm expecting this. Let me bring my cup somewhere here. Okay, so this is where I'm expecting the Nasdaq 100 to finally come to after some brief consolidation here of this 21 weekly EMA. Now step it down to the daily chart and see if anything is different. So yes, on the daily chart, I'm still expecting this ABC pattern to play out. 1, 2, 3. We've done this, and I don't think this is necessarily going to be the end of the move. Although this is our target for last week, so kudos on those who were able to stay through the volatility. Should have made some good money on this trade all the way from here, or somewhere right about here. Yep, came all the way down here. So yeah, I do expect us to probably bounce, and we may bounce to about this level. Somewhere around the 24,594 is on the cards, and then from there we'll make our way back down. And I think our final destination is somewhere around the 23,169 to about 22,989. So indicators wise on the daily chart, as I showed also on the SPX 500, is that you have a cycle low here, and with cycle lows, more likely you're going to go back up until you make a cycle high. So during the consolidation, that's what I expect, that stochastics will make its way up to make a cycle high, and then from there we can talk about the next leg down. Now let's look at gold and silver to wrap up our weekly analysis. And here again, gold on the weekly time frame closed with a doji, bearish doji, slightly below the close of last week's candle. Now, this is showing to be like an accumulation or sideways price action for me. Although on the lower time frame, I think the tops are in temporarily on gold. I think gold would go up further, but not now. And I expect this price ways side action to continue its way. Potential target for gold, as I'm looking at, is somewhere still within the 38, 31 level. When we get here is when I'll start to get the confidence for the next leg up. Until then, I think this is just going to go sideways. And that's based also on the daily time frame, because this lower high, okay, this lower high is showing as um, a key resistance. All right, the fact that it couldn't even make it to the high, but just made a lower high, and now we're just consolidating. So I think in the next coming week, gold is going to continue this price action in this range. Okay, somehow between this 41.80 and maybe somewhere around the lows of 39,990. All right, it's going to bounce between this here until it makes its way up, to this 38, 33 zone that I'm looking at. Indicators wise, on the daily chart, we do have RSI pointing downwards after the lower high, and RSI is still, in below the 50% level, which means it's weak. Stochastic cycle wise, we hit a cycle, not a perfect cycle low, and so I do expect something like what happened here to happen here too, which means we just go up and we just continue our way down until we hit the final cycle low. So I don't expect any upward price action, strong price was action on gold in the next coming week. Let's look at silver and see if the picture is any different on silver. Okay, and this is a weekly chart of silver, and silver, similar to gold, is pretty much doing the same thing. This seems to be going sideways at the moment. But then there's a double top here, and this double top is the pattern that I'm paying attention to. So I see this as a distribution zone currently, sideways distribution, potentially. As the price gets to this level, it always has some strong selling. Tells me that bulls would have to give up something in order to go further up. And I think that's pretty much what is happening here. So on the weekly, it's an indecision candle, open and closes within last week's open and close. That suggests to me that you know um the bears have not been able to conquer. Okay, in other words, this is still bullish. The bulls are still holding power. The bears haven't been able to capture the market yet. So that's why I think this is going to go sideways. They probably build a little bit more momentum before any further down price action. Indicators wise, RSI is still supporting a down target unless things change during this consolidation. Um, Either to probably challenge this highs again, but based on this high already placed in, because let's not forget, this is a double top high that we made, and I think with this double top high, basically with divergence formed now on the RSI, it would be coming down. Indicators supporting it as well. Look at your MACD. MACD hasn't crossed down, but it's inching closer, and momentum is coming out. So this is what I think is a distribution happening. My fast MACD is already ticked down, so it gives me a little bit of an early signal that it's bearish more than bullish. My long-term RSI also has the same divergence we're talking about. So I think silver will come down, and it might probably break through its support at the 9 period average on the weekly, and potentially make it to somewhere around here, which is about what 44.55. I think that's my next target on silver. We come to about 44.55, which is about here. Yeah, 44.55, somewhere here. Okay. So that's my target on silver. And once we get here, we'll reassess. I'd like to thank you for spending the time with me and listening to the analysis. Have a great trading week, everybody. Cheers. Thank you for listening and unlocking trade ideas and insights with us. One candle changed everything today. I hope you can already see how today's analysis can transform your trading decisions. If today's breakdown helped you spot opportunities or potential risks you would have otherwise missed, please consider subscribing and imagine what we will uncover together next time. Kindly give the video a like and share with an investor or a trader you care about. They would thank you when it saves them from a bad trade or a missed opportunity. Until next time, keep unlocking profits one candle at a time, and we'll meet again in the next video presentation. Cheers.